Today's episode, we're going to talk about put credit spreads and how you can use this fantastic tool to get yourself some good returns with limited risk. Hi, everyone. Welcome back. The clip you've just seen was an excerpt of a video that I posted a few days ago. And if you haven't seen that video, I'll leave a link in the comment section so that you can click and go and watch. In that video, we talked about put credit spreads and how it can be a useful tool to create almost risk-free income for yourself. Or even when there's a risk, you're limited in your exposure to that risk. Today, I want to talk about a particular trade that I executed yesterday that applied the put credit spread strategy on ticker symbol GPRE, Green Plains Energy Recycling Company. And I'm going to walk you through how I executed the trade and what kind of returns that I got from it. All right, let's get it. A quick recap of what a put credit spread is. So basically, you're going to execute two transactions. So the first thing you do is you identify what price point you anticipate the underlying stock to be above at the expiration of the contract. Once you know what that price point is, or you have an idea, then you sell a put at a price point below the point that you've just identified. Next, you buy a put at a further price point below the put that you just sold. And what you should expect is to receive a credit in your account, less any fees for executing both transactions. Both transactions have to expire on the same date. And what that means is that the credit that you've received is your maximum gain. And you would anticipate that if everything goes really, really bad with such a strategy, then you would lose only a fixed amount. And we will see how that works out in the transaction that we're going to show you. So if you look at ticker symbol GPRE, it's safe to say that over the last couple of months, since March 2021, ticker symbol GPRE has been bouncing off round about the $26 mark. So every time it hits the $26 mark, it tends to go back up. If you expect that ticker symbol GPRE will continue to bounce above the $26 mark, then it's safe to say that you can take a calculated risk of selling a put under that $26 mark and buying another put under that $26 mark, which is exactly the transaction that was executed yesterday. We sold the $24 put that would expire on the 18th of November, and we bought one step below the $23 put that would also expire on the 18th of November. And if you look at our Tastyworks transaction statement, for the put that we sold, we received a credit of $40. And for the put that we bought, we paid out $30, which means that we received a net of the two $10. And by the time you deduct the fees, it would come down to about $9 and a few cents. So, what did we risk for the transaction? We risked a potential fixed loss of $90. What that means is if for any reason ticker symbol GPRE goes below the $24 mark by the 18th of November, we would lose $90. But as long as ticker symbol GPRE stays above the $24 mark, we get to pocket the $10 less the fees that we were paid when we executed this transaction. Okay, let's look at the analysis of the trade that we've just executed. So remember, we're looking at ticker symbol GPRE. We started the transaction on the 3rd of November 2022, and the contract expiration date is the 18th of November 2022. which means we're looking at a 15-day contract period. For this transaction, as we've seen, we received a net credit of $9.75 after fees deducted, and our maximum loss, which is the amount that will be blocked from our trading account, is $90. If everything goes well and we keep that $9.75 premium that was paid yesterday, we would have a return on capital deployed of 10.83% when you annualize that over a 365-day period, which means if we make 10.83% returns every 15 days, we'll have an annualized return of 263.61%. Again, this highlights the beauty of the put credit spread and the potential returns that you can make from such a limited risk transaction. So we've seen how we can execute a trade on ticker symbol GPRE, knowing that there's a low probability of the price of ticker symbol GPRE dropping below the $24 mark. And we've been able to use the put credit spread to take advantage of that understanding or anticipation to book ourselves a 10% return in just 15 days. That is the type of value you can get from executing a put credit spread option strategy. Thanks for watching. We hope you enjoyed that video. As always, if you haven't done so already, hit that subscribe button and the notification bell so you get to see new videos as soon as they're uploaded to the channel. And if you know someone that will benefit from watching this video, please share it with them and hit the like button as well for the YouTube algorithm. And if you've got a question, please leave that in the comment section and we'll be sure to answer. You can check us out on Twitter and Instagram. And see you again soon. Enjoy your life.